Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a good show for you folks today. Got a lot of movers. We of course, are going to continue to discuss this hurricane trade ahead of the big storm projected to devastate a lot of Florida this week. We also have a breakdown in Disney, some security issues at EFX, a couple earnings to discuss, and two guests for you today. First up will be at 8:35. It's Michelle Krebs. She's a senior analyst at AutoTrader. And then we're going to be joined later in the show around 8:45, 8:50 by Andrew Middlebrooks. He is a local money manager. He is the CEO and CIO of EL Alpha Partners, and he's got a little hedge fund here in Detroit. So we're going to talk to Andrew about that. Joel, how are we doing in the spoos right now?
Not well, Spencer. Trading down 7 points at 59.50. Opened up 66.50. Couldn't hold that close, the double close area. Now we're in the red here. Pre-market low 55.25. That coincides with the lows through from Wednesday and Thursday. So already traded yesterday's range here in the pre-market. Let's look at crude oil futures. They are trading down 14 cents at 48.95. Let's see if we can find any pattern here in the daily chart of crude oil. Let me pull that up for you. Ooh, double top, potential triple top here in the lower 49 handle. Gold and silver continue to surge. Gold now over that 1350 level. Let's see if we can post another close there as well. And silver, well, not well into the $18 handle, but up 15 cents at 18.27, right near the high of the session at 18.29. So, Dennis, for the first or second Friday here in September, we got some news to talk about.
Yeah, and it's all about the hurricane. I mean, they're talking now it could be a direct hit on Miami. The reinsurance stocks have been talking about this the last 3-4 days. They have just been annihilated. They are pricing this, and, not to scare people, but I've never seen the reinsurance stocks fall like this. Typically, and, everybody wants to talk about Travelers and Allstate, but they're more diversified. It's the reinsurance ones that have the direct exposure. And we've been given these symbols for the last 3 days, and they continue to get killed. So, congratulations to anybody who got short these things. But let's just, go through these. AHL. Aspen Insurance. This is one that I actually do have. I've had this in my investment portfolio for like a decade. And this is one I've actually got still in my investment portfolio. And I wish I would have sold it at a time. I did hedge these, and I've shorted preferred stocks against a bunch of these. So I'm actually doing well on the overall trade just because I'm short a bunch of preferred stocks at some of these reinsurance companies. But anyways, AHL, Aspen Insurance, RE. Let's look at this one, which is Everest Re, and they obviously have exposure. We talked about this on the show yesterday. It fell another 15 points yesterday. So after we talked about it, we started talking about these things at 240. It's at 211 here right now. So, these are huge moves here. RNR is another one, Renaissance Holdings. That has went from 145 a week and a half ago down to 123. AXS is another one. I'm short some preferred stock in this. $64 just a week or 2 weeks ago. It's now 52. HCI, we've talked about that one. HCI Group, $40. It's under $29 here this morning, getting the beats again. HRTG is another one. That thing's been hit. UVE, Universal Insurance Holdings, that's went from 22 to 16.50. But you just look at these things and these are bigger moves than these things had in the financial crisis. They're pricing these things like they're in trouble, and or there's going to be some major catastrophe they're going to have to pay out. And the one problem here is the reinsurance companies, and somebody had this analogy on Twitter, I forget who it was, but it was a good analogy. I just read it going by my stream. It's kind of like writing naked puts. It's kind of what these reinsurance companies do. They're always bringing in premium. If there's a little disaster, they pay out a little bit. When you get that black swan event, when you get that epic disaster, same thing like when you're writing naked puts all the time. 99% of the time you make money, but then the fat tail comes from statistics. You know what I'm talking about? The black swan event, the event, that it doesn't normally happen. That only happens less than 1% of the time, or even, a fraction of 1% of the time. And it can actually do a lot of damage, and you lose years of earnings as a trader. That's why I've always said, when you're just writing naked puts, it seems great in a bull market, and it seems great in a sideways market. But you get into something like the financial crisis, those people who were writing naked puts in 2006 and 2007 got wiped out in late 2007, 2008. Now, we haven't seen that in a decade, so you always got to be careful. That's why we like the way Nick Shaheen does it always, and we always, talk about Nick Shaheen when he's writing naked puts. He doesn't write naked puts, he writes a covered, so he'll write like a 55, but buy a 50 to cover himself. So it's always the spread, just in case the black swan event happens. And 99% of the time, he would never need that. But in the 1% of the time, Nick Shaheen is going to be okay. Well, these reinsurance companies are kind of like this, where they're always writing basically naked puts on catastrophes. Most of the time the catastrophes aren't big enough to really harm them that badly. But if you get one that's really, really bad, this is what can happen. And look at the chart of AHL. It went from 45 to 36 bucks in 3 days just on speculation of this hurricane being a catastrophe. So we don't know exactly if it's going to be yet. We don't know what's going to happen, but it's pricing like it's going to be one of the biggest catastrophes in U.S. history.
And Dennis, you were all over this on Tuesday, and we talked about it. It was just institutional selling. You could tell a lot of these stocks picked up volume on Tuesday. I'll give you an example here in AHL. Last Friday, you traded a measly 333,000 shares. On Tuesday, when things really got into the swing of things, 1.5 million, 1.3 million, 3 million yesterday. And Mark Jacob made one good point yesterday when he said, when these institutions get out, they start to do some selling. It's not, maybe 1 day, but sometimes to cycle out of a full position, it takes 2-3 days. And here's just a great example.
What was the volume on that yesterday?
2.9.
It's going to be higher again today here, I bet you. These things are in free fall right now. There's no reason to jump in and be a hero and say this is the bottom. The only thing is the one wild card in some of these reinsurance companies, if for whatever reason it's not an epic disaster, these things are at a huge discount right now. So there could be that opportunity, but they're pricing like it's going to be. And I'm scared, when they're talking about direct hit on Miami here now, it sounds scary.
What about some cheap calls, Dennis? Is that...
There's going to be nothing cheap now. If you were to talk in, Monday, yeah, and I was looking at some options on Monday. The 35s were going for like 20 cents. The 40s puts on this AHL, like early Monday, were going for like 40 cents. And obviously, I wish I would have paid up to 40 cents. And now there was obviously 4 points in the money. So, I think that ship has sailed. Now, the one way I still think the ship that hasn't sailed is shorting the preferred stocks. Because if it is an epic disaster, and if these things even go down further, they'll eventually start to hit the preferred stocks as well. And they started to do it yesterday. I know sometimes it's funky to show the preferred symbols. They're different on every platform. But, AHL has two, AHL PC and PD. I'm short of both. And they just started falling yesterday. The AHL.PC finally fell like 2% yesterday. They typically don't hit the preferreds unless it's, really getting to be credit concerns. They just started hitting them yesterday, so it's still early on the trade. I shorted a bunch of other ones too. I shorted some Renaissance ones. I shorted some Axis Capital preferreds because these were low risk. In my opinion, they're low risk shorts right now because they really hadn't sold off yet. They started selling off yesterday. I'm up nicely in the trade already, but I just think if it really, if the SHI blank hits the fan and it's really ugly, they'll hit the preferred stocks too coming up. But if it's not, and it's not a catastrophe, the preferred stocks never really got sold off, so they're not going to rally much. So I think it was the better way to play it. Now, they did sell off some of them 2-3% yesterday, so you're chasing it a little bit, and they'll probably bounce right back if it's not an epic catastrophe. But I think it's a safer way to get exposure to some on the short side to some of these reinsurance companies.
I was thinking the options, I was thinking maybe some cheap calls, if
just in case it's not bad. But I don't think check AHL, like the 40
there's
calls.
Nothing there. There's nothing.
There's not much market probably either. And if there is a market, I think they're going to be paying up here now because the volatility is there all of a sudden.
Exactly.
I know you can check it. I think there's a play. There's going to be this thing's not going to be $36 on Monday. It's going to be, if it's an epic, if it's catastrophe worse than expected, it could be under 30. And if it's not that bad, it could be over 40.
Yeah,
so but we don't know. It's still got another full day of trading here before, and they've been going straight down. So who knows?
Yeah,
but
a strangle, you're going to be paying up. You're going to be paying up for a lot of premium there. You're right because of the increased volatility. But I don't know.
That's why I went to the preferred stocks.
Yeah.
I felt like, and I got paid for it yesterday. It was actually, I'm still in them. I'm still short them, and I'm sticking with them until, I know how this transpires. I'm saying in a worst case scenario, they maybe go back to where they were, and I don't make money now because I was shorting them almost at their all-time highs. And now I'm looking if it is an epic disaster, those things could go down significantly. So that's the way I made a lot of money during the financial crisis, was not shorting the common stocks, shorting the preferred stocks, because the preferreds really lag. And I remember saying this to my wife. This was Bear Stearns, and Bear Stearns had one preferred stock out there. Bear Stearns had went from like 130 down to like 85, or maybe even more than that. It was down like 30 or 40% from the highs. And I remember saying to my wife, I said, and this was, like mid 2007, like we're talking like August, before the financial crisis really got, it had started, but before everybody was really, selling stocks off. I remember saying to my wife, I'm going to short a bunch of this Bear Stearns preferred because it's right up at the highs. I'm like, my risk is I'm paying a 6% dividend, because the thing's not going any higher, because these things just basically trade at par or a little bit above par, depending on interest rates. But there really wasn't a lot of risk to the short side. And I said, I don't think it's probable that Bear Stearns go under, but I think it's possible. I said that to my wife. And I shorted a pile of Lehman preferreds. I shorted a pile of Bear Stearns preferreds, and I shorted a pile of other preferreds as well. And I made my whole life on those trades. And I got out early, like on those Bear Stearns. Like I can remember, if you looked at a chart of the Bear Stearns preferred, it had traded in the 25 handle for 3 years. 2 weeks later, that $25 preferred was trading at 12. It got cut in half. And eventually it actually got, became Bank of America, and actually came back all the way to 25, and it worked out. But, I was long gone and out. And those, trades, and, my other buddy, Chris, too, that's what we made all of our, basically our life on, was shorting those preferred stocks. And that's, just people not thinking of this type of stuff. So it's, it lags a little bit, it lags a lot sometimes, and it was lagging. And you got a Bear Stearns that just got cut in half, the common, but the preferred still trading at par. I'm like, I'll take a shot. And obviously, 2 weeks later, 3 weeks later, Bear Stearns almost went under, Lehman went under, and the rest is history on this. So,
and you had limited your exposure on that too, was paying out the 6% dividend.
Yeah, all about. That's what I'm all about. If you've been listening to the show for the last 4 years, you know what I'm all about. I'm all about limiting my risk. Well, when I see a preferred trading at par, and I see the common getting killed, I think, hey, there's a lower risk to play this thing, and if it really gets ugly, they'll start to eventually hit the preferred. And I don't think it was like the next day it started getting hit, but within the next 2 weeks it got hit. It got hit hard because obviously, the financial crisis got started, and I had a portfolio of short preferreds that paid me. And that's really like those years. People, some people got, a lot of traders made a lot of money during the financial crisis. I was lucky to be one of them. So, but it was mainly because of those short preferreds.
We do have Texas Linda took some profit in her Generac yesterday, and I saw that got into the 44 handle, sold off a little bit. I mean, it went from 36 to 44. Texas Linda, just tell us, what made you pull the trigger on it? Did you take half of the position? Just was that your risk reward? Just share that with us. But that got some of these had reversals, but they came right back. They did come right back.
Home Depot and Lowe's, same story yesterday. And we were saying, and Mark Chaikin with a great call on Home Depot yesterday, he's like, I'd be taking some profits on our show. He was saying this yesterday, I'll be taking some profits. I'm in there. I'm still, the same thing with me here. I think these are now overdone. Here we were a month ago worrying about Amazon selling appliances, and they were smacking Home Depot down below 145. Now here we are a month later, we got a hurricane, and everybody's like, Home Depot's the whole everything now. Well, these sometimes are short-lived here, these pops on this. I mean, Home Depot has a major business on. All their business is just in Miami. I mean, is it going to help? They're a company that everybody, if they've got to rebuild a city, if it does get trashed, yeah, but it's not like it's going to, increase their earnings 50% or anything like that. So I think, if this thing gets up to whatever 160, I think it's the play now to maybe book profits or sell short even. But I'm going to wait till, after the hurricane, see how it goes. Again, like I said, this is like an earnings event. If it is worse than expected, you're going to probably see these continue, like the generic and the Home Depots probably continue to go up. If it's as expected, I think they go down. And if it's less than expected, they're definitely going down. So that's the consideration here when you're trading these stocks like Home Depot, Lowe's, GNRC on a hurricane trade, they're often short-lived. Reinsurance stocks completely different because they got to pay out billions of dollars. Those companies could actually be in a world of hurt.
The Home Depot, if you were looking at your dailies yesterday, you popped to 59. What was that high? 59.28. And then look at here. You go back. The all-time high is 160.86. But those sellers that were present going back here just back in June, you had a 159.22 high and a 159.03 high. Boom, stops at 159.28. So using your levels could have helped you out there in Home Depot. Lowe's, I noticed too that one, this was the recovery from the Sears and Amazon hookup here. And they hit it down under 72, rebounded back to 78 $0.5 level. Boom, that's where it found resistance yesterday. So some good daily levels coincide with some prior highs there if you were looking in your Home Depot and your Lowe's.
And then the other ones that we've talked about when we got that list from the StockTwits follower that I mentioned yesterday, USG, Owens Corning has been moving, OC. You can look at a couple other ones there, like the rental car companies had been moving up. They had some positive ink from Goldman, though, yesterday. Hertz and Carr both having decent days. URI has been moving up here. This is all your classic hurricane trade. And again, this is a run-up before the hurricane. Sometimes it's a matter of, most of the gains are made ahead of time, and then on the actual event, sometimes they sell them off. So we'll have to see what happens on Sunday, where it hits exactly, how much damage it does. It's going to do some damage, just a matter of how much. And that'll dictate, where these stocks go, next week.
All right. Waste management. That got up. That's kind of lagging here at the 76 level.
I think it's a stretch.
Yeah, that's what. Yeah, what are they going to charge you more money to take your trash out?
I think that's a stretch. Yeah. I don't really see that as a hurricane play. Not like the lumber liquidators has been, the Home Depot, the generic, the Lowe's, even the rental car companies. I think the waste management's a bit of a stretch.
All right, let's go to the House of Mouse here, Dennis. And you actually,
I had a good trading day yesterday.
Yeah. Yep.
I talked about this. We've been talking about this 2-3 days on the show. I actually shorted the stock right near the open yesterday, right after the open. I got done with my open. I was like, oh yeah, I've been talking Disney. I think it's hanging there. I was like, this is my train of thought. I said it yesterday on the show. I'm like, I'm going to short Disney because it looks technically like it's hanging there too long. I think it's eventually maybe going to break down below 100. And I think you had a catalyst in the hurricane is what I thought. Not that Orlando's going to get hit, but people could worry about Disney being in Florida. I thought maybe, this could make it breach 100, which would be a technical breakdown, and then that would be ugly on the charts. So I shorted yesterday around 101.5, and then I got the windfall because I came out and warned about earnings, and I actually did mention that he's had some cancellations at Disney World with people worrying about the hurricane. Then the stock obviously collapsed and is now trading down here. I'm still short at full disclosure, still short Disney here right now. I'm thinking I'm trying to hold this one. The scalper blood.
Yeah, Dennis, don't even look at this one.
I'm up almost 5 points in it. It's hard not to. 5 points in one day in Disney seems like wow. You take. Don't look. What's that thing about the gift horse and the mouse?
Yeah, but Dennis, you put this one in the swing trade account, so you're not going to look at this. Where's your stop?
Now I think if it got back up over 100 again, I think I'd get out of it. But I think, this sets up well for even a 2-day move here. I'm just looking, it is trading down a little bit in the pre-market here now. I don't think this is going to be a 1-day event. They were kind of warned. The media stocks have already been in trouble. Disney's got a higher multiple. We got a hurricane coming. A lot of catalysts here. A lot of reasons not to cover this short. So my target, when I said this breached 100, I said it to you yesterday when I was talking to you on the phone. I think my target's going to be down there near those lows. If you go to the weeklies, you had multiple lows in October down the 90, 91 area. I think that's my target on Disney here. So I'm going to try to hold on to it and see if I can hold. I know the scalper blood in me always ends with me scalping out too soon. But trying to hold this one, I'm up 5 points. I think there could be another 5-6 points in here.
Yeah, this is a daily chart here, and we talk when you go quickly through an area. 1, 2, 3, 4, 5 days it took to go from 90 to 100. Sometimes that could be reversed in even a day or so, as we get experienced here by these reinsurers where they've taken out months and years of gains and only a week here. So good trade in that one, Dennis. It spilled over. The Disney news spilled over into some of the other media stocks. Comcast took a hit. They're gonna have some problems. They're gonna be losing some subscribers here. They said because of the hurricane. That looks like it has some support at the $38 level. We'll see what that happens. But timing, Dennis, you think about it. You put it on because of a technical thing, but then you got a catalyst, and that's really what took it to move the stock.
I mean, you got multiple reasons that I like this trade still because, you had the technical breakdown. So technically, it looks like weak now. You've got the catalyst at Iger. First of all, he's warned on earnings here or whatever he said yesterday. I don't know the actual. Do you have the actual thing that he said yesterday, Spencer?
Yeah, he just said earnings. He just said earnings.
What actually did he say?
Yeah, he just said they'd be flat year over year.
Yeah, that doesn't sound good. And I mean, the media count stocks have been in a world of hurt. We know everyone's been hit except Disney. It's kind of been like, been forgiven here. But now that they've said this, I think you're going to have a lot of institutional managers say, whoa. And as stocks go down, don't forget analysts chase price. And there's probably a lot of analysts sitting there with buy ratings on that have to revise estimates. If this thing starts to get down in the mid-90s, you can see a couple downgrades coming at it. And that could bring it down to the 91 target that I've got on the stock right now. Also, is the hurricane is a wild card. I mean, we know that they did get some damage. I believe it was from Francis. I was trying to remember which hurricane, did hit Disney. They did get a little bit of damage back then. They're so far in. I mean, they're 70, 80 miles inland, so it never gets it too bad. Obviously, the only thing they can get is wind damage. Never going to get water damage that far in. A little bit of rain maybe, but I don't think it's going to be an epic disaster for anything like Orlando. But that being said, I mean, it's a wild card too. They get a little bit damaged. I get a few people nervous canceling. It doesn't help the company. So lots of catalysts here for me to stay short Disney. Hopefully I can stick with it.
All right. Do we want to cover? Not many earnings here near the end of earnings season. We do have some movers though from last night.
Well, we should go into EFX first because this is the big stories from last night. Equifax is down 13% here this morning, down 20 points. There's a security breach, major security breach. Spencer, details.
Credit card numbers for approximately 209,000 U.S. consumers with personal identifying info was accessed.
Yeah, that does not sound good. So at EFX, you know what else I saw go by? They said, and I don't know if this is true, but on my Twitter stream, and my Twitter stream's always flying by, and I was reading hurricane stuff, but in between that, I saw somebody tweet out that 3 insiders sold last week on EFX. You wonder if they had this memo already that they knew there was a security breach and they're going to announce this. But anyways, if they did, they're in a world of trouble if they actually had that information. Maybe they didn't. Maybe there's always, insiders selling and buying. I mean, it could be coincidental, but man, that's horrible if they actually did do that. Anyway, stock's down 18 points here this morning.
118.75. That is your pre-market low. We're getting a little bounce up to the 125 area. 125.83 is high of the rebound, so we'll keep an eye on that for continued upside. On the downside here, wow, got to go to the monthly charts here. Last time we were down under 120, that was back in February of this year. If you're looking for more move on the downside, 2 monthly lows at 1631 and 1651. So that could be an objective after the 1875. But I don't know. Nice windfall for anybody that was short this stock. Maybe they missed the low of the day. So 1875, I think that might hold up. But Dennis, I'm not making a wager because I could have given you odds on the GE wager yesterday, and I would have gotten smoked. That has to be the most hated stock on Wall Street, generally.
It's hated right now. And obviously I made the call that I thought it was going. I was trying to get you on a bet, and I wanted some odds though that it was going to take out the 24 low. It did. So I'm right on my call on the show, but I'm still losing money because I still have no my investment.
Get it out, man.
So I must be the only person that makes the right call and actually loses money. But I'm sticking with G. Like I said, I've had the stock in my portfolio for 17 years. It has paid me more in dividends. If you took all my dividends that I've taken out of the stock, my average cost of G would be 0. So I'm just sticking with it because it's paid me 3-4% for 17 years. I mean, add it up. So is a dividend safe? I don't know. Maybe I should sell it. Maybe it's all together different here now. It's got a 4% yield, but I don't feel like G is going away here. Everybody's acting like this is the death of the company and it's over. I mean, I don't know. I'm not a believer of that yet. If I do believe it, I'll turn around and sell it. But right now, I think there's still, I'm not coming here and buying more G at 24. It's hated. I think this candidate for a 2-day move here. I think it could be 23.5 here today. Not even joking. So, but
if you are buying it here, right, with the 4% dividend, and this is basis if they keep, they don't cut the dividend, but you got a buck worth of downside protection here, right? 4%.
4%
So,
dividend.
but I said
There's
that to
$1.
Nick when it was at 24.40. So if I would have done that then you only have 60% protection. But you're going to see some money parking here. Let's see if 24 is a level that's going to get back and hold today. But
I think 2-day move. I think it's 23.5 today. Not even joking. I think this thing can see 23.5, another 50 cents down on G today.
Okay.
This sets right up nicely for the 2-day move. It's down the pre-market. You got to give me odds though, because that's a bold call. I mean, G usually moves 20 cents. So if you give me like 3-to-1 odds, I'll take you on that. I'll take 20.
You're hot, man. No, I mean, you're hot with the Disney. You're hot with the preferreds. I'm not standing in the way of a major
I am
trend.
hot right now.
Yeah.
Trader goes through. You go through hot and cold streaks. I had a cold streak like 3 weeks ago.
I remember.
I'm hot right now. Everything I was touching was working yesterday. So it's one of those days. It's one of those runs that you get every trader. It's all about getting through the cold streaks and then striking more when you're hot. Because for whatever reason, you get in that trader zone, you're feeling it, and I'm just kind of feeling it right now. But, just getting me on a cold streak again, too. So you always got to be careful. Other one I'm feeling is AT&T. I mean, AT&T, and I have this one in my best portfolio, too. We know I got a ton of these stocks in my portfolio because I like that dividends. Had AT&T in there for the better part of a decade. So, again, this is a stock I've probably taken more out. If all the dividends that I've been paid over the last 10 years, I probably cost basis on AT&T would be zero. So, because it's paid me 4 or 5% for a decade. So, that all adds up. Anyways, AT&T 35.60 here.
Wow.
It's down a couple cents in the pre-market. That's an ugly chart yesterday. I mean, this is ugly. This is breaking down below the lows. I don't know what's going on at AT&T. Got the 5.5% dividend, but this one has me somewhat concerned because it hasn't sold off really, that much yet. I don't know if it's like a changing. One thing I've said about the big phone companies is that as things get cheaper, they get squeezed, right? Like people are going to be coming out with new technology. Then eventually, I could see cellular service being free, or a lot cheaper. Going everybody thinks you gotta have a cell phone, you gotta pay, but its competition is going to be continuing to get more intense here, and margins could eventually get squeezed for AT&T too. So I don't know if I like AT&T as much as I did long term. I do like the 5.5%. I'm thinking though, I don't know. I'm thinking I might eventually dump this one. Been in there for a long time.
Cajun One is asking about Visa or MasterCard being affected from this Equifax thing. I mean, I don't know. It's kind of
they're both up.
They're both up.
MasterCard is actually even trading higher today and bid higher. So I don't think you're going to see a sympathy move there. I think when you see a security breach, that is specific to the company.
Okay.
So I don't see it there, but obviously FX is ugly here. One thing we didn't say is cybersecurity stocks. They could get a pop from here. You got the FireEye trading up 2%. You got the Palo Alto Networks, PANW, trading up 1.5%. The other one I always think about is CyberArk, CYBR. It's trading up 1%. So cybersecurity stocks getting a little lift here, but it seems like every time we get a major security breach, they get a little pop, and then these things just fall back down anyways. I mean, FireEye is up there at a wall of resistance around 16. Could this push it through it? Maybe. It's getting through it here this morning. Palo Alto Networks is the same story. It's coming up into some major resistance too. I don't know. Maybe this kickstarts them, but there's a lot of overall concerns in the market as well, like macro concerns. We didn't mention North Korea today. I mean, I don't know. I'm torn on whether the cybersecurity stocks, they're getting a little pop here. Maybe I have a good day here, but I don't know if I'm still in these things long term.
Also, the hack ETF.
HACK is a way to play them all.
Always a good
So it's trading up 0.6% in the pre-market. And there's not much liquidity there, so it's probably going to be up more. So
and while I'm at it, HAAK, which I believe is the leveraged hack ETF.
What is it?
HAAK. I think on top of my head,
there's a leveraged ETF for the security stocks.
Yeah, it's not HAAK. I lied. It's hold on. It's HAKK. That's what it is. HAKK is the leveraged cybersecurity ETF.
This is ridiculous. They're coming out with leveraged ETFs on cybersecurity stocks.
There's leveraged ETFs for like everything, Dennis.
Holy cow. You know what? And, whatever. I'm not going to say anything about it.
Don't get on this rant. Don't get on it.
I'm sorry.
Spencer.
I'm sorry. I didn't mean to.
Gosh.
Don't get me wound up here this morning.
Okay.
So.
There's not a lot of volume in this, folks. So if you're going to get in there, you better find someone to trade with because it traded 641 shares yesterday. So, all right.
Did it?
Yeah, it did.
That's called no liquidity.
It doubled its volume though. Well, it didn't trade on the 6th. I guess the designated
Did
market.
trade all day.
It did trade all day.
Not even one trade.
It hasn't traded twice in the last 6 days, but it did double its volume yesterday. Tuesday 334. No trades on Wednesday. Thursday a whopping 641 shares. So maybe we'll stay away from that.
All right, earnings Kroger. How about that?
Yeah, earnings report Kroger. I just saw a headline. They're not going to give guidance anymore. That's not good news. Give us the numbers here, Spencer.
All right, here's what we got. Q2 EPS 47 cents versus a 39-cent estimate. Sales of 27.6 versus $27.49 billion. So a beat on the sales, a beat on the EPS. Fiscal year EPS coming in higher than the estimate. They reaffirmed that outlook. They are no longer going to provide longer term guidance. So they're going to provide annual guidance still. They're not going to provide longer term guidance past the fiscal year.
Boy, oh boy, Dennis, this stock world of hurt here, but you do have a level to lean on, and this was I remember this one. You had the bad earnings, and then you had the Amazon Whole Foods deal, so that was like the double whammy. Took it to 2046. Now you get whacked again. You found buyers ahead of that level, 2068. That's your pre-market low. So I'm just looking. I mean, it could definitely take it out and crush it, but I'm looking at that there's a buyer there at the 2050 area. The highest level since its rebound right here, right now, 2140. So there's some good levels to keep on, and they're throwing some volume around on this one too.
Absolutely needs to hold 20. So 2046 is that low back from June 16th. I'll just round it down to 20. If for whatever reason they take this to the woodshed, I don't want to see this thing reach $20. That's where I would be very concerned here. But not a lot of people going Krogering lately.
I told you what they did. They bought a nice local grocery store in my area that had like 3 or 4 different locations, and the one was right by me. They paid off for it, and then they closed it 6 months later. They're sitting there empty, and they're trying to sublease it. And I mean, it was a great location, and I'm not sure what's going on. I mean, this sector, I mean, who knows what's going to happen with this whole, with Amazon.
A lot of wild cards.
Yeah, I mean, I don't know what. It's tough, but 2050, 2048, that was the low of the move. Texas Linda's mad at Kroger because they did away with her senior discount, 10% on Kroger brand. So I didn't think we had any senior citizens in here, but we do. Texas Linda, the Generac Kroger trader.
CMG.
Oh,
stock
man.
This one. Cowan. They're of my opinion. So, okay, I was bearish CMG the whole way down at the $300 price target. It breached it, got down. I came back up. I haven't said much about CMG since. It often gets a little pop up. If it goes back down below 300, I might want to play this one from the short side again. Cowan is giving, they're downgrading it to underperform. They put a $250 price target on it. You know what? Possible. I kind of agree with this too. I think this is a stock that's still multiples too high. Still got problems, still have a confidence issue here. I think CMG is in a world of hurt. Ackman's in a world of hurt. And it's down 6 points here. 300 is support now. I'll say that support is support until it's broken. If it breaches that low that we had back on 296, that's when it's going to trigger for me that maybe it's time to short CMG again. So right now, no opinion, but I kind of agree with this Cowan note. I think 250 is possible. I'm going to say it's probable, but I think it's possible.
Boy, they gave you a shot at the 320 area. Last Friday hit 321.51, and then sellers congregated just under that 320 level. So if you had been so inclined to look at that, resistance could have had a lower risk trade. Closed at 17.25. Pre-market low comes in at pre-market low is 306. Let's see if they got 300 on the mind. That coincides with your 3-day low. Tuesday's low is 305.55, getting a 5-point bounce off that. So I'll call 305 minor support, and then you can find a 300.85. Low of the move, 296. S&P's on the rebound here, Dennis. Down only 550, but Spencer, we got to take a break here and talk some autos, right?
We do, because our guest coming up here in a minute is Michelle Krebs, senior analyst at AutoTrader. So we'll be right back talking car stocks with Michelle.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with a fired-up Dennis Dick and Spencer Israel working the boards. Michelle Krebs is our guest. She's a senior analyst at AutoTrader. Michelle, how you doing today?
I'm fine. I'm not in Florida. That's a good thing.
You know, you sent me that email right when things were starting to, hit the fan with the hurricanes and everything. And I looked at it and I'm like, I kind of construed it as, everyone's negative. But you kind of had that data kind of gave you a different outlook on what was going to happen there. So let's just start with the effect of Hurricane Harvey. Kind of the way you looked at it before it hit, and the anticipated effect of Hurricane Irma on the U.S. car market.
So what we did is we looked at past hurricanes, specifically Sandy and Katrina, and we did some calculations about what we thought we looked at the market, which Houston is a big market, and it's a very car-centric market, very high ownership. Unlike Sandy area. And we calculated that anywhere from 320,000 to 580,000 vehicles would be damaged or destroyed in the Houston Harvey path. That's about $5 billion worth of vehicles. And when we looked at shopping on our sites and our credit applications through one of our divisions, DealerTrack, we found that indeed, shopping falls off, applications fall off. But as soon as the storm cleared, we saw that shopping, and if you check with dealers, they'll tell you so, the shopping went way up, applications for credit went way up. So, when you think about that many vehicles, and in a typical year, Houston sells about 325,000. So there's going to actually be an uptick in sales there because of so many vehicles lost. We do not expect the same with Irma. It's not as, depending on where it hits. Now, if it hit every area every market that's possible, we will see as big a hit. But if it's Miami mostly, that's not as big a market as Houston.
All right.
But it's still a couple 100,000 vehicles.
How do electric cars perform in floods?
I think anything electrical. I mean, that's one of the things we're warning consumers, because we're already starting to see some of these flood cars show up on Craigslist and such. If the water comes up to even, the footwell or, under the undercarriage, you're in trouble because there's so much electronics on the vehicles.
All right, going into U.S. vehicle sales, we had them last week. Where do we stand now, and what's the outlook?
Well, what we had anticipated that August would actually be the first month this year that was up over the previous year. That didn't happen, and largely that's because of Harvey. So for new vehicle sales for the year to date are down 3%. Much of that is in the fleet sector. Retail sales are down about 2%, and while fleet are down 4%. The big hit is the car companies are not selling as many cars to daily rental car companies. So we definitely are in a post-peak era after setting a record in 2016.
And you expect that trend to continue?
Yes. We expect sales to still be around that 17 million mark. But, in next year, we anticipate a little bit lower. So, yes, we are definitely, we don't see any new records in sight.
Yeah, just an observation here. I mean, these stocks, Ford and GM, good earnings, good news, really doesn't go anywhere. And now the vehicle sales start to taper off. You have a hurricane, kind of bad news, and these things are starting to perk up and show some life. So just kind of contrarian thinking there. Let's just move over. We got a question here. I'm not going to ask you about a specific stock, but just rental cars you said that the sales have slowed down the rental car agencies, but Hertz has gotten a pop over the last few days. Do you think the trend overall in these car rentals or car auctions could continue?
Well, I've been talking to the rental car companies, and of course, they got clobbered too. They lost vehicles in Houston. I suspect Florida's a huge rental car market. They're moving cars, but they will lose some for sure. But on the other hand, there's a huge demand. We're hearing stories of big lines to get rental cars because people have lost their cars, and very high prices being commanded. We're lots of charges of price gouging. Now that will all taper back off, and they will be ordering, more cars from the automakers. It's just a matter of which automaker is going to sell to them.
Looking at the self-driving car arena here, Tesla's kind of been out of the news a little bit. Ford, GM, Chrysler, any developments from those companies in the self-driving car arena?
Well, Tesla needs to be focused on launching the Model 3. That is still, they've turned over some to employees, but they really need to get that rolling. From General Motors, they are moving. They're introducing this fall their Super Cruise, which is a step toward autonomous. They don't like to call it autopilot, but it theoretically can do hands off, although they're not suggesting that. But that's an option available on the 2018 Cadillac CT6. So that's definitely that comes out of their purchase of Cruise Automation out in San Francisco. Ford made the announcement with Domino's that they're going to have autonomous pizza delivery, kind of a PR stunt, but it shows how can autonomous vehicles play in our daily life. Fiat Chrysler recently, they've taken a different approach altogether. They're partnering with others. They have a partner with Google's Waymo to provide Chrysler Pacifica minivans to be outfitted with driverless technologies. And they also signed a deal with BMW, Intel, and Mobileye for an automated driving partnership. So more development going on.
Hey, Michelle, at this point of the big three, who do you think is best positioned in the self-driving car space?
People always ask me that, and it's hard to say because you don't know everything that's going on behind the scenes. So it's impossible to say.
All right. Well, I figured I'd give it a shot then. Michelle Krebs, she's a senior analyst at AutoTrader. Michelle, thank you so much for joining us today.
Thank you.
Thank you, Michelle. We'll talk to you again soon.
Okay. Bye-bye.
S&P futures hanging out 24.60 folks. I'm talking about the September contract. The volume is in the December contract. They did the rollover. So on Monday, I'll be back with some December numbers. Still pretty good volume in the September if you're trading that. Your pre-market low, 56.75. We have Wednesdays and Thursdays lows in that area. So we'll keep an eye on that as support. Coming back on the upside, I want to see if we can get mid-range on the day. We quite haven't got that 62.25, perhaps for a little bit lower risk short opportunity here. Dennis, we're going to bring you back in here, and we did not talk about any imbalances. I imagine we're seeing a few sell imbalances today.
Yeah, we'll grab those and then we'll go back to other earnings stocks here. So GE, 249,000 to sell. That's, going with my theory of a 2-day move here. Some institutions dumping stock on the open. I think GE is in a world of hurt. Bank of America, 143,000 to sell. Financials, again, a little bit relatively weak here this morning, but, overall, it's not too rough of a day here yet. Square SQ 74,000 to buy. There's still that pesky buyer there in Square. Square is one that's held on well. It's interesting, this is a stock that's actually looking itchy on the chart, like it wants to go up. There's not a lot of stocks charts that look like that. Square is actually one that looks like it wants to go higher and test the all-time highs here again. That's an interesting setup from the long side. That's pretty much it. They're pretty small here right now. Pfizer 45,000 to sell. Verizon 33,000 to sell. Colgate 36,000 to sell. All kind of significant. Disney 53,000 to sell. It's fallen through. Full disclosure, still short Disney. Okay, so earnings. AOBC, Joel, American Outdoor Brands. Actually, we'll go to you, Spencer. Do you have the numbers here? This is getting annihilated. This is the old Smith & Wesson. AOBC.
Well, Q1 adjusted EPS of 2 cents. 11 cents was the estimate. Sales of 129 million versus 147 million dollars. So bit of a miss there. That was for Q1. The Q2 guidance EPS is coming in pretty far below the estimate. 27 cents was the estimate. 7 to 12 cents is what they see for Q2. Sales, a big miss as well. 171 million was the estimate. 140 to 150 million is what they see for the current quarter. So that's bad. Fiscal year guidance, EPS, and sales coming in lower as well.
This is ugly. This is an ugly chart from the last 3 months. $24 in June, 16, now 13.80. It's basically almost been cut in half here now. Nobody buying guns, Joel. What's going on?
Look,
you're not out there buying guns?
No, Lisa won't let me. Let's see here. You were holding on to $16. I don't even need to look at the daily chart. What you need to do is look at your pre-market trading. You had a spike down to 1281. Price discovery going on here at 1380. So I'll call it whichever way we go above 1380. I think you got a chance for a little bit of recovery rally. Coming back on the downside, I say buyers coming in ahead of that 1281 low, perhaps lower $13 handle. Boy, let me go to a monthly here to see if I can find anything in this thing. Boy, well, we've taken out the lows from early 2015. We've gotten into the lows from, let's see, boy, we keep having to go farther back. I see 3 monthly lows in the mid 12 handle, and that coincides with your pre-market low. So a lot done on the downside there. And RGR, is that getting hit as well?
Oh, yeah. Yeah, Spinner and DC both talking about it in the chat, too. Yeah, it's down. It was down last night, trading actually in the 46 handle. It looks like it could go below that today. 45.75 offer. Nobody's lifting that offer. I think you're going to challenge that 45.20 low that we made just 3 days ago. It's 45.20, 45.25. This is one of those tick-size pilot stocks, trades in nickels. So I always find that annoying. Obviously, that pilot's not been very successful at all. I think it's something they got to reconsider and even get rid of. Anyways, 45.75 is where it's offered right now. Best bid down to 45. I think this breaches the 45 support. I think this chart breaks down. I think this chart is ugly.
And boy, that big premium being paid for Cabela's. I mean, you think that they're?
I don't get it.
I don't get it either.
No, I don't get whatever. Let them buy Cabela's. They wanted to buy it. They wanted to merge. I guess it was their major competition there, but I don't get it.
Is that a private company that took them out, or is it?
It was Bass Pro, right?
Yeah.
Spencer? Yeah.
Bass Pro?
Yes, it was.
Is that publicly
There's the two big ones, Bass Pro and Cabela. They were like the same store. I get into those two stores, you forget which one you're in. Am I on a Bass Pro or Cabela's? The stores are almost identical anyways. Huge stores. I don't get it. I mean, I don't get those stores at all. We already gave them a rant yesterday, though. So anyways, they got paid, though. Cabela's is getting taken over. It looks like the deal's going to go through. So shareholders getting paid there. But, somebody in the chat was saying, well, they sell a lot of guns. But RGR and AOBC not sell a lot of guns right now. At least AOBC isn't.
Well, I think this probably has to do with the administration. Didn't we see after the election, gun stock.
That's a great point.
Took a hit because all of a sudden, no one's afraid that their guns are going to get taken away, right?
Great point. Yeah, I think you're right. I think before the election, these things were getting a pop because, if you're just thinking, normally you think, oh, gun stocks, that's the Trump stocks. No, because he's not going to put regulation on it, so you don't need to go and buy your gun right away. Great point, Spencer. I think you got that right there too. Nobody's jumping out and worried about they got to go buy our guns now because we're going to get further regulation on buying these things in the future because Trump is pro guns. So that's why I think AOBC. I think you're right on the money.
Okay, all right. Earnings still.
We got Fizz, which is your stock, Joel.
Why my stock?
Yeah, you bring it up all the time.
You have talked about this, Joel. You must have. This is a stock that you were giving us back here when it's like $60, weren't you? 60, 70 keeps climbing and climbing and climbing and climbing. Man, it's 120 here now, Joel. This has been your stock.
Yeah. Unfortunately, I tried to short it once, and I don't know how I did it, but this must have been it was around 100. I don't know. I remember I shorted it, and I'm thinking I just bought some puts and had a little bit of profit in it, and I'm like, maybe this is one that I should cover and buy some calls. And I covered the short, never bought the calls. I mean, this the sugar tax thing is going through, and it started in Philadelphia, now Chicago, San Francisco. I mean, it hasn't hit the the Pepsi and the Coke yet, but this thing makes the bottled water. I know we go through a ton of it at our house, and the flavored water and a lot of brands. So what an unbelievable chart here. Very little analyst action. Did they have another good report?
82 cents versus 74 cents, 260 million versus 248.9 million. So yes, a good quarter.
Stock's down
because
of
bit.
It's just went up too much. I mean, expectations are too high, but I think this is also one that when it pulls back, seems to just be BTFD all over this thing.
Yeah, very, very strong trend. Hit the all-time high yesterday, 122.64. All-time closing high, 122.20. So the only thing I could say in that, maybe if we get back into 122 handle, you'll find some sellers. On the downside, you can pick your daily lows for support points. Let's see here. Yeah, haven't even taken out yesterday's low. Actually, there's a pretty good level there. Two lows in a 117 handles, and you could split them. 117.20, 117.69, call 117.50. If in fact it gets down there, you found buyers there the last 2 days, maybe 3 days in a row.
Tailored Brands, the old Men's Warehouse, TLRD reported earnings. Spencer, details.
I can never remember this ticker. TLRD reported yesterday Q2 adjusted EPS 99 cents versus an 88-cent estimate. Sales of 850 versus $868 million. So a bit of a miss on the sales, but a beat on the EPS. They did, however, narrow their fiscal year EPS outlook, and that's pretty much it.
This was wild. This was actually trading up ahead of the report. The numbers came out and they slaughtered it all the way down to $11.76. Funny how these numbers come into play, Joe, because they had three lows right in that 11.80 area from August 30, 31st, and September the 1st. And then it bounced right back. I mean, bounced back in like a minute and all the way back up in the 13 handle again. So whoever was picking the bottom there got rewarded. BTFD on TLRD.
I'm keeping an eye on the upside here. 13.22 was your high, 13.16 close. 13 was a high, 13.02. I mean, just a lot of trouble. I think you hold 13, you stay green. I have room to go. If I'm holding at 13, I'm not giving a whole lot below yesterday's low at 12.80, especially the kind of the pre-market action that you had. But holding 13 here, get a chance for a little bit of a rally. But Dennis, when's the last time you bought a suit? Who's wearing suits? You know, no one. I mean, I guess they do sell the other stuff there, but not, just a retailer, right? How can you get too excited about it?
Yeah, I don't know. But the only thing is some of these retailer stocks have stopped going down and some of them have shown some life. So again, expectations are so low for this entire sector that, it becomes a point where maybe valuation is just too cheapening up value investors that are actually starting to buy these things now. L Brands is interesting to me. My brother-in-law was saying this is one he was looking at possibly throwing it as an investment portfolio there. I'm thinking the same thing. LB, I don't have hardly any retail stocks. I'd have to look at now. The 100 stocks that I have, I don't know if I have any apparel retailers in my portfolio. I've sold them all because they're all ugly. But you know what? It might be time to start nibbling back into some of this. And LB is one that I've had on my radar for a long time. I don't know if the dividend is safe. It's 6.5%, I believe. So it's a huge dividend. I hope it's safe. I don't know if it's safe, but it's rounding here, Joel. What do you think of this?
You got it out. You got it out.
It got out.
Yeah.
You know what? If it goes below $35, you got to say, okay, I was wrong, and I'm cutting this out. But it's showing some life here. And some of these other ones, like Kohl's bounced back big time from the lows. Nordstrom's has held on well. Macy's has come off the lows. So LB's just hanging there. I don't know. I got a feeling that LB might be looking and itching to try to get back up to 40.
I mean, you got major support at 36 even. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 lows, right? The $36 area. Trying to break out above 38. Spencer, you want to add something?
I just wanted to ask Dennis a question. Why do you feel like you need exposure to apparel retailers?
I don't know, because they've been hit so far, because valuation, and it's been a great call not to have any exposure to these things. I'm trying to think if I have any of them. Like I used to have the Dillard's preferred, but I even sold that because I got scared because Dillard's was going down so hard. I don't know. Maybe you're right. Maybe I shouldn't have any exposure to any of these. But people are still going to wear clothes.
Well, I mean, but if you're adding exposure to add exposure, then what's the point?
Well, I have no exposure. So I just thinking that people eventually still wear clothes. Like L Brands has those stores. We know they're in malls. So that's the Victoria's Secret. That's an issue. The mall traffic is down. I don't know. Maybe people aren't wearing lingerie anymore. Maybe there's multiple fundamental issues here. The value, this might be another value trap. Maybe stop me. Maybe this is a value trap. Maybe I should hold off on this LB. But for some reason, it just looks like right now, maybe not even for an investment, maybe just for a swing trade here, Joel. Maybe it's better as a swing trade because maybe long term, maybe Spencer's right. Maybe I don't want any of these in my investment portfolio. But as a swing trade, this sets up well.
Texas Linda, JC Penney hit 350, now back over $4. So that's 76.
They're showing life.
Yeah.
Spencer, they're showing life.
You know what, Dennis?
Get in there.
We something you didn't bring up yesterday, and maybe because it didn't happen later in the show, but you know what? Some dogs are barking on Wall Street here.
They are. Twitter. Hey, who just said that in the chat? Spinner. Close above the 208. Look at that Twitter. That sets up for a 2-day. You know what? I'm writing that one down too. There are some stocks that are setting up for upside moves here. We got hurricanes, nuclear wars, but that Twitter chart looks bullish to me, and so does Square. Dorsey, we're getting long Dorsey.
Dorsey.
I like the Square chart, and I like the Twitter chart right now. Short-term swing trades.
Don't look now. Fitbit. Did you see Fitbit?
No, well, GoPro. Maybe GoPro kickstarted all this yesterday. Because GoPro had the big pop. Fitbit. Fitbit's showing life.
And who else? Snapchat.
Wow, I can't get bullshit. I thought that could set up for a 2-day move too. You know what? These stocks set up well.
Yeah.
These are all nice looking charts here. Joel, you're hot right now too. Yeah. These look good. You set up for 2-day moves. What do we just say? Snap we liked as a potential long. LB we liked as a potential long. Twitter, these are like stocks that we've hated for a long time. Twitter we like as a potential long right now. What was the other one?
Fitbit had a big run. Snapchat, kind of Twitter.
Twitter.
But, Dennis, this Twitter better go up today because I nibbled in it yesterday. I'm like, okay, it got a running start at 17 because it opened at 1680 and had a nice pop up to 1740. And I said, I'm not selling this because Dennis is guaranteeing me a 2-day move in the stocks. So that's why.
I think so. You knew I'd say the 2-day move. I think, okay, so we'll go to the high on the gap down day, 1760. That would be my target here for the 2-day move. I think you can see it. Yeah. I know what? You got me on this. You got me on this little Twitter bandwagon here too. Long term, I still don't know. Valuation still an issue. Short term, there's some life here, guys.
It's a trade.
Trade.
Do we need to do any ratings? I saw Barclays got very bullish here.
There's a lot today.
Yeah, there's a lot. Well, we only
Spencer, fly through a few.
Well, okay. So in upgrade land, not a ton. Ralph Lauren, Credit Suisse upgrading. Ralph Lauren upgraded Credit Suisse to outperform. Goldman Sachs initiated in the video game space. So Take-Two, EA are buys, and Activision Blizzard is a neutral. Zynga is a neutral as well. From Goldman, we got Barclays initiating pretty much the entire brokerage financial services space at overweight. That includes Charles Schwab, ICE, E-Trade, NASDAQ, a bunch of firms there. CME Group, all overweight there. Barclays, as far as downgrades go, you mentioned the Chipotle thing at Cowen. We also have Pepsi downgrade at Credit Suisse. And Capital One Financial downgrade at Morgan Stanley. So is Synchrony Financial. So that's what I got.
All right, 859. Dennis, any of those stick out to you? Any of them moving?
Yeah, you're seeing like Synchrony Financials trade down 1.5% in the pre-market. Then we know the financial stocks are in a world of hurt here right now. Some of that's to do with the hurricanes. So Capital One has been in a world of hurt. I mean, this has been ugly ever since it reported at the gap up day up to $88 and quietly has lost all of those gains. Plus is down at 78, trading the 77 handle. Critical support for Capital One, 76.05. That was your low from May 31st. That's the level that it absolutely needs to hold. I'm not coming here and shorting these things now. I think the trade to the short side on the financials was a week ago, obviously before this hurricane stuff started hitting it. Now, you look at some of these charts like Capital One, you think, wow, you're starting to, it's been hit pretty hard here, down $76 now, and it's not a hurricane. But, all the financials have kind of been grouped together. They've hit them all just because of, hurricane worries. So, I don't know. I'm not coming here short Capital One.
All right, Dennis, we'll let you get to that keyboard there. I hope you have a good open, finish the week strong here. And Spencer, what do we got something extra on the docket today,
We got a guest in office right now. Not a super common event here on Pre-Market Prep, but we do have a guest right here in our office right now. Andrew Middlebrooks. He's the CEO and CIO of EI Alpha Partners. Correct, Andrew?
Yeah, it's EIA Alpha Partners.
EIA Alpha Partners. All right. Well, first of all, welcome.
Thank you for having me.
Andrew is a money manager here in Detroit. I want you to tell us a little bit about, I guess, your background first.
What you said, born and raised here in Michigan, went to UD Jesuit for high school, then had the opportunity after that to go down to Atlanta and play baseball at Morehouse, and then unfortunately blew my right arm out, and that ended that. So came back here to Michigan, and then moved out to DC, working for the House Financial Services Committee, and then in 2015 I came back, started working at capital management firm Bloomfield Hills, and earlier this year launched my fund, EIA Alpha Partners, and started investing in January of this year, and then left Stewart Capital in March.
So what is your overall strategy for the fund?
So the strategy of the fund, it's a quantitative global macro fund that looks at options, equities, and other derivatives, and really just trying to exploit inefficiencies in the global market.
So then I guess I want to talk to you about your current view of the markets right now, since that's what this show is about. So tell us about your view of the market as we're in it right now.
Right now, I think we're still in a prolonged bull market, but still there is some intermittent choppiness that you've been seeing with the geopolitical events, with the hurricane, both of the hurricanes back to back, and then you got a third one coming as well. So it's a lot of short-term noise for right now, but I think still the fundamentals are sound.
Are you with the money you manage? Are you making trades, or are these more investments? Is it long, short? How does it work?
Yeah, so long short fund, really holding anything from about a month to even as long as 18 to 24, depending on really the investment and really the overall investment thesis going into it. So it just really depends on what it is.
Give us a little bit of an idea of what you're looking at when you are doing your due diligence on a stock.
So I really start with at a 30,000 foot view, and really trying to say, okay, where do I see the market and what's the environment, and then trying to identify, what that global market is, the conditions, and then going down from there, trying to really understand, okay, where are the actual opportunities for alpha, and then where is the actual opportunities to get some alpha on the short side.
What specific metrics do you look at?
You're really looking at the beginning. You're starting at price to earnings. You're looking at momentum, and you're looking at kind of the trends. So it's really kind of a mix of your fundamental and your technical analysis, and really kind of meet in the middle to kind of blend the best of both worlds.
I'm being asked in the chat to get a stock from you. So can you give us something?
Well, I would say that, last month closed out August up another 7%. And the two main drivers of that were Grupo Galicia and Fiat Chrysler.
What's the ticker on the first one?
It's a GGAL. Yeah.
GGAL.
Yes.
And what? Tell us about that trade.
That trade, it's an Argentinian bank, really starting to see a uptick in the Argentinian economy, Latin American economy, and then also with the weak U.S. dollar, and then they're starting to actually lend out quite a bit more. So it's been a good run recently.
What was the trade in Fiat Chrysler, or what did you see there?
Oh, I hopped in there right after the election. They were best positioned to say if there was going to be a border adjusted tax, to be less affected by it. And then also, the recent chatter around the sale of Jeep has been a main driver recently.
Andrew, so let's take a stock. Let's look forward here, and let's just grab a stock that perhaps is on your radar now, something, and then I'll pull up the chart, and then I'll ask you a few questions. So something that is on your buy radar right now.
Something that's on my buy radar right now, I would still say I'm long financials, and so I would say probably either Morgan Stanley or Bank of America.
All right, so let's go with the Bank of America. That's a heavily traded stock. It's had a very nice run. Financials have really been hit under these what their exposure is going to be to the hurricanes. But you just don't go out and buy the stock, right? You look at different option strategies and try and hedge your position. So even if the stock doesn't necessarily go up, if it sits still, okay, that's a trick of Nick Shaheen that's on. So just look at Bank of America here. Tell us how you look at what options, how far do you go out, premium, does that cap your upside? Give us a breakdown on Bank of America.
I mean, really on Bank of America, you're really looking. Yes, short term, they're really overexposed to some of the hurricanes. But then if you really look at the long term perspective, that you're going to have a raise in it, you're going to have continual raises in interest rates. Granted, they're going to be pushed out a little bit longer, but as those interest rates start to raise, you're going to start to see the uptick in their income, and so I think that's where I'm looking at. And then on the chart, you're really kind of trying to identify, okay, let's look at it, maybe 10 to 15 days out, put a nice little collar strategy on it. You always want to protect your downside, and know what you're willing to lose going into something. But then, having that, 2x upside, is really kind of what I try and look for. So,
you want to explain a collar to our folks?
So yeah, I mean, it's really kind of, you're buying, you're selling a put and you're buying a call on a position, saying, okay, this is where I think that it's going to go. This is the low end that I'm willing to take on this, price. And then on the high end, this is where, I think it could go. And so it's really trying to, make money on either way the stock goes.
All right. So if someone came in to your office today and they said they wanted to put all their money in General Electric, what would you be telling them, or what kind of strategy here would you have for them?
Well, first, I would not recommend that at all. Not to say that General Electric is, there's not a potential to invest in it, but putting all your money in one basket is really kind of a terrible situation. But I would really say, okay, well, what's your thesis on General Electric? Because do they think that is it a long-term play? Are they trying to is it something that they think, oh, this is going to be a short-term investment? So really, you try and understand what their perspective is and what they're trying to get out of this investment or this trade, and then you can really try and dictate it. But I mean, I would tell them if you're gonna buy General Electric, I definitely trade the options on it, and could hold the equities. But if you wanted to actually hold the underlying security, you definitely need to be trading options on it, because it's definitely on a bumpy ride.
What about some of your shorter term strategies? Do you have stuff you say if there's something set up for a day trade or 1 or 2 day trade? I mean, if something comes to you, or are those things that you're actively looking for?
Really, I mean, it's really looking for active opportunities, whether there's catalysts for recognition or, sometimes definitely around earnings. You kind of look back and say, okay, what were some of the, previous, what previous stocks, have had a wide variance in their earnings, the projected earnings and then the actuals, and then trying to say, okay, let me look at something like I'd say maybe a Ford recently, or even Fiat Chrysler with coming out with the lack of auto sales. But but on the flip side, if you're looking at it, the auto sales, yes, that short term it's going to be, maybe wind down, but with the 3 hurricanes, potentially hitting, there's going to be people that are going to need to get a new car.
So what's the first thing when you get up in the morning? What's the first thing you look at? Obviously, for me, I look at it in the middle of the night, in the morning. I like to look at the S&P futures. Do you have a go-to gauge in the market, something that kind of sets your tone for the day, or maybe said you focus in your research? Just tell us a little bit about your trading screen, and what are you looking for early in the day to analyze the market?
So really early in the day, I'm first checking the prior day's performance in the portfolio, then stress testing, the bottom 10 positions, making sure that is it something that's structural, or is it a short-term issue? Is it a long-term issue? And then going from there, kind of, my benchmark and what I'm, looking to beat is the S&P. And so relative to this year, with the S&P up, year to date about 14%, we've been up 60%. And so being able to say, okay, this is, the benchmark that we're looking at, and then understanding, okay, where the market is going and where, trying to understand everyone, the other players' perspectives. It's really important to know the outlook and the perspective of the other actors in the market before you kind of get into it.
So you have a good performance year to date, and obviously you're looking to manage more money. Is it possible to scale what you're doing? Are you trading in liquid issues, liquid options? It's something where people make a market for you and you just drive right in, or do you think that perhaps if the more money you bring on, it's going to be harder to replicate those strategies?
No, everything's pretty liquid. All my positions I could unwind in a day or two, and so really it's kind of understanding before you get into something that no matter if you're trading, investing $100 or $100 million, having the same systematic, repeatable process, it really kind of is a recipe for success. And so it doesn't change, with the dollar amounts. It's really kind of just understanding, what's your philosophy, what's your perspective, and then what's your strategy going into it, and not allowing, you to get overwhelmed by, a couple of commas or a couple of zeros.
All right. And before, I just got one more thing for you. You talked about you've developed strategies, and do you have a computer background? Do you do the programming? Do you have programmers for you? How do you approach that?
Yeah, so kind of more of a self-taught. I've been putting, writing down, my own principles and methodologies. And then I was able to say, okay, well, to build these out and to, repeat them on a systematic, on a repeatable basis, I could, hard, wire them and code them into some algorithms. And so really kind of started from that, actually taking the principles that I had been using, before I had these systems. I developed my own proprietary analytics platform, GLM Analytics, and that's really just all encompassing all the principles and strategies and methodologies that I've accumulated over time. And I try and update the 5 to 10% of them each day, each year.
Andrew Middlebrooks, EIA Alpha Fund. He's the CEO, CIO. Thanks so much for coming on today.
Thanks for having me, guys. I appreciate it.
All right, that is our show for today, folks. Hope you enjoyed it. It's good to be back. Good slate of shows for the week. We got good slate of shows for you next week. So excited for that for you. If you want to listen to our show today, you can do that. The podcast is on iTunes, SoundCloud, and Stitcher. Also, the show as it aired live can be found on youtube.com/BenzingaTV. Don't forget about the Benzinga FinTech Summit. bzsummit.com is the site for that. September 28th is the event. BZVIP is the coupon code to get a discount on tickets for that. So have a good rest of your day, folks. Have a good weekend. We'll be back with you on Monday.